Welcome to the Seth Farbman on podcast, from startup to stock exchange.
Good morning, everybody. Welcome to the podcast. Today, I have a very special guest and a good friend. His name is Todd Heinzel. And besides being the founder of an interesting company called uplisting.com, I think that it's something that is really going to offer value for the audience that listens to the show, because very often we have guests on that focus about startups. Very often we have guests that focus about being listed on the stock exchange, doing an IPO. And it's really a really hot industry topic right now. There's some very premier name IPOs that have gone public recently, whether it's Uber, Pinterest, Lyft. But nobody really digs deeper into sort of the in-between. The companies that are on the OTC markets, so they are a publicly traded company, but nobody sort of talks about the journey of how do you then graduate to the next step, to the Nasdaq, to the New York Stock Exchange, how to do a dual listing, how to do a cross listing. So I think that anybody who's listening to this podcast today is going to get a tremendous amount of value and practical information. So with that introduction, I'd like to welcome Todd to the podcast. Todd, how are you? Welcome.
Good, Seth. Thank you for inviting me. I appreciate the time to at least educate your listeners a little bit more on the topics today.
Well, I think we should jump right in terms of just trying to get an understanding of, maybe outline for us the benefits of uplisting to a higher exchange. Somebody might think, well, I'm public already, I'm on the OTCQB, I'm on the OTCQX. Why would I want to potentially spend more time, effort, money by listing to a higher exchange? Can you maybe point out some of the benefits or reasons that a CEO or company might want to go that route?
Absolutely. I guess one of the key benefits has to be for the shareholder or for the issuer shareholders. Often CEOs will come to us and say, my shareholders cannot deposit a share certificate, or there's difficulties in depositing that share certificate, or there's a insurmountable cost, and leaving many of their shareholders frustrated, and then obviously their investor relations and their C-suite become equally frustrated. So the first question we often get is, if I list to a higher stock exchange, will those particular shareholders get to deposit either shares and or have a pathway to tradability? The second benefit has more to do with the corporate objectives, and that has to do with either a financing, some sort of registered offering, and or a moment in the company's growth cycle, whereby they sort of outgrown the OTC and they need to raise more than, let's say, $2 or $3 million. So
okay,
those tend to be the two core benefits, and then others happen to be more ancillary, whereby they just happen to, if you list on either the Nasdaq or the New York Stock Exchange, obviously they come with their marketing cachet, and it's sort of a proud parent moment for the CEO to tell both institutional and retail investors that they've sort of made it, if you will. So. I
can't relate. What does that mean, to be able to market better because you're listing on the Nasdaq? You mean like, go down, ring the bell, and then market the hell out of the fact that you were there? I don't understand what that means.
Absolutely. It's amazing to see the childlike expressions on CEOs' faces when they're finally either ringing the bell or in front of the cameras early morning or late early afternoon. At the Nasdaq. So it's both of them are equally an event, and both of them, I said, are literally company milestones that CEOs should be proud of, or CEOs and their boards should be proud of.
Well, it's interesting. We're talking about ringing the Nasdaq bell, and it looks like a lot of fun. And honestly, Todd, it is. It never gets old, and I can't explain why. But when I was running vintage filings in the Edgar business, I had done that for about 15 years, and I was never invited once to a Nasdaq ceremony. And then, for some unexplainable reason on the stock transfer side over the last 5 years, I've probably gone to 20, 25 ceremonies. And it looks like a lot of fun, and it is. But the question that I guess I have for you, and I think that the people listening should know is, okay, now what? I mean, the confetti comes out, and the band settles down, and now your life as a Nasdaq-listed company. Can you sort of point out some of the compliance requirements or just the high-level important factors that a company should know about if they're going to live life as a Nasdaq company as opposed to where they're at now?
Yeah, you're raising a good question. So if we take a couple of steps back, obviously in an issuer's life or pre-uplisting, there has been a lot of excitement. There's been a lot of preparation. There's been a lot of discussion, dialogue, strategy, whatever vernacular you want to use, up until the moment that they actually get that approval letter from one of the exchanges. And rightly so. I mean, it's an exciting time in a company's life. One of the challenges that we see post-listing, if you will, is in exactly what you're asking. So what's next? So many CEOs will come to us, and it will be more corporate governance related, in that they will want to know how to properly have their first board meeting, or they may want to have their first committee meetings, meaning the nomination or the compensation type of committee meetings. And so you'll see more corporate governance related items. And keeping in mind both exchanges, and then when we say both exchanges, I'm talking about Nasdaq and the New York Stock Exchange, have what are called continuous listing standards. I won't get into them on this podcast. I mean, that's probably a whole other podcast.
Right.
What we do tell CEOs is that keep in mind that you are no longer on, let's say, a junior exchange, a quotation-based system, and that you now need to start acting like the big boys act. So things like Lyft and Uber, Pinterest, and even Microsoft, they all have regular board meetings. They all have regular contact with their institutional investors. They are now communicating on a regular basis to the shareholders and really giving some sort of guidance with respect to what the growth and what the corporate objectives of the company are. Failing to do that often has, it often has not the desired results you want, because you're going to end up having many, I guess, angry or frustrated shareholders show up at your next annual general meeting, which is a requirement for senior exchanges. You need to do that on an annualized basis. So while I may not be getting into specifics, we are trying to ease the CEO into his new role as a Nasdaq or a New York Stock listed company. We're asking them to take 2 steps back and take a breath. And then we're asking them to do the appropriate governance things when it comes to board meetings, board calendars, and their committee reporting requirements. So.
Well, let me ask you. I mean, you raise a good point in terms of taking 2 steps back. So, in terms of timing of it all, I know in my world, for example, people have said, well, when do I actually need to engage a transfer agent? And generally the answer is, well, when you have more than, say, 20 shareholders and you get tired of keeping all that data on Excel sheet, when you can outsource it for $100 a month, or right before you're about to actually go public and you want to demonstrate to potential investors that you have a real registered agent taking care of your books and records, that's the right timing. On the uplisting side, when is it the right timing to start to think about this process, if I'm the CEO of an OTC company, is it ever too early? Is it ever too late? What's the ideal time to start these discussions and this planning process?
So the first thing I would tell you is uplisting.com. For myself personally, I'm the worst salesperson on the planet. I often tell CEOs or the CFOs or the C-suite that you don't need me. You know what I mean? And they'll come back and they go, then let me ask you a question. I have this particular corporate situation, or I am raising X amount of dollars, or it was suggested to me by either the auditor or legal counsel that maybe I should explore an uplisting, dual listing, or a cross listing. And that's sort of when we get involved. So we'll sit down with the CEO and we'll do a bit of a situation analysis and see whether or not there is actually a pathway to an uplisting. And then we'll take stock of, how many shareholders they might have, what's their bid price currently, what does the trading pattern look like, do they have a strengthened board, or does their board need to be strengthened? And then from there, you get to derive a bit of a timeline. Now, we often say, hey, it can never be too early, but we all know there is a situation where you can be too early. There are some issuers that regardless of where they are in their corporate life cycle, they most likely is going to take them 2 or 3 years to be uplisted. For those who are on the runway and ready to take off, those particular issuers, we strongly suggest some sort of collaborative plan, or at least a conversation between ourselves, the auditor, the legal counsel, really all the particular people that will assist them in getting them to a higher exchange, or at least getting them to a successful higher exchange or listing on a higher exchange. So
that's interesting, because you sort of just named the team players that are involved to make an uplist successful. I have spoken to countless CEOs, and I would imagine you have as well, where the philosophy is sort of, well, I don't need anybody else. And, it reminds me of back in the day when I started Edgar filings, people actually said, well, can't I do it for free on my own? And the answer is sure. You can go to the SEC's website, and if you want to spend 100 hours to Edgarize a document yourself, you can, but why would you want to? And that I guess that argument is made throughout any type of service provider. I'm sure when I was a securities attorney, people said, well, don't you just copy and paste the 10Q and change the numbers? It ain't that easy. And so what do you say when a CEO says, oh, well, my lawyer will handle the uplisting, I don't really need an advisor or a consultant. What is the added value that they need to recognize? And I've seen it many times where they do go off on their own. They try to accomplish it, hand in hand with their attorney without the rest of the team members, and they fall flat on their face and end up coming back to people like you. So what do you say to them that explains from the get-go, you need more than just an attorney?
So it kind of goes back to what I was saying a little bit earlier. Like I said, I'm the worst salesman on the planet. And so I'm often saying, and you're right, you don't need me. Right. You know what? And then we get into a conversation, and it goes back to this sort of situation analysis, or it goes back to this taking stock of me asking some simple basic questions during the review process. And then the CEO or the CFO in some cases, and even maybe the chairman, come back and they'll ask a few more questions, and then they start coming to the realization that, hey, you know what, maybe having a quote unquote, say, life coach in the uplisting world is not necessarily a bad idea. And maybe it's not such a bad idea to have someone oversee the process. Now, Seth, I think you've heard me on a number of occasions also use the analogy. It's what would you rather have at your wedding? Would you rather have a chef or a cook? So,
right.
In some cases, I use that analogy with CEOs who continuously go, well, I'll just get somebody else. I'll just get my lawyer to do it. Quite often, if you want a chef and you want all the appropriate ingredients to a successful uplist or to a successful listing on a senior international recognized exchange, then you are going to take a collaborative process and you're going to include somebody like uplisting. You're going to include your lawyer, your auditor. You're going to include investor relations, your transfer agent. You're going to include your board of directors, whether it be a big board or a little board, and you're going to include the C-suite, and in some cases you may even include the shareholders. So it's a family affair, if you will. And then on the other side, if you want to cook and you want to throw a quick meal together, you're going to probably end up with a quick meal result. And then often not having any sort of plan or any sort of strategic plan, that is, often adds months to the actual uplisting process. And
I would imagine besides the timing of it all, companies that are contemplating this or that might start to think about this for their own companies, besides it being I don't want to say a long-term process, it's certainly not an overnight opportunity for them, but it's also not a cheap one, right? I believe, what are the listing fees, like 25, 50 grand just for the application? Is that somewhere in the ballpark?
Well, so when you're filing your application, and we'll use the Nasdaq and or the New York Stock Exchange as examples, those the listing application fee is a $5,000 non-refundable fee, and then once you get close to the finish line, there's that conversation whereby, hey, listen, it's your first year listing fees can be well over $55,000, $60,000, $70,000, depending on the exchange. So you might be on Nasdaq Capital Markets, or you could be on a Nasdaq Global Select. Those are just two different tiers, and they also have different fees associated with them. And that's similar to the New York Stock Exchange. So
do most of these companies that embark on an uplisting simultaneously do a capital raise with an underwriter, investment banker, or are some of them self-sufficient at that point where they don't even need to include that as part of the process?
Yeah, so you're asking a good question, and unfortunately the answer is very, very short. It's both. So in some cases there are issuers that are doing a capital raise, and in that capital raise is in conjunction with an uplisting or a senior exchange listing event. In others, the growth of the company has happened in such a way that hard work over the years and perseverance and diligence has the board of directors now exploring the idea of listing on a senior exchange solely based on them meeting the listing qualification standards. So I know it's probably not the answer you want, but the answer is both.
So let me ask you this though. In terms of this process, when you're dealing with Nasdaq, my experience, I guess, as a securities attorney, was mostly dealing with the SEC in terms of the registration statement, dealing with FINRA in terms of getting the symbol. But what I found is that often it's about the relationships that you have within the industry as a whole. And I guess my question to you is, does that come into play in the listing application? I mean, knowing examiners or knowing equally as important what they look for, is that something that matters?
Yeah. So yeah, again, a great question. Let me break it down into two parts.
Okay.
With uplisting.com, I think what I really like about what we've been able to accomplish is our relationships with legal counsel, our relationships with the auditors, our relationships with the transfer agents, investor relation firms. There's some really good people out there, and there's some really good people
Is there more than one transfer agent out there?
I believe there's only one.
That's okay. I just wanted to clarify that.
But you do have good people, so that's the main thing, and that's important, and that's important because it makes our job a lot easier. It's a lot easier when you have a legal counsel that is open to suggestions that are not always law based, that they might be practical based, or there might be some pragmatism that attached to the listings itself. It also doesn't hurt to have the collaborative process whereby people can underpin each other's points in order to ensure that the issuer understands any pitfalls and or any challenges that might arise within the review process. So that's really part one. Part two is the relationships actually with the exchanges themselves. And we have exchanges with the relationships with the listing departments all over the world. Quite often we are sort of pegged to the Nasdaq and to the New York Stock Exchange, but we have them with other exchanges as well.
I've seen recently the London Stock Exchange coming into the news very frequently.
Absolutely.
Is that an area that you see as becoming more active in the near future?
Well, we see Europe overall and some of the exchanges in the EU becoming more visible, if you will.
Okay.
But I just wanted to let you know. I just wanted to finish up on the part two, which was we do have relationships with the reviewers. They are they're great people. They often will. They work with us. They give us suggestions in terms of how to properly communicate to them. They give us times. They give us scheduling. And we're also, with those relationships, we're able to manage the expectations of the issuers that we're dealing with or that who are our clients. And that's important, is the management of expectations. Gone are the days where you're going to be able to uplist or list on senior exchanges within a couple of days. That doesn't happen anymore. There is a very stringent review process. There is a very and it's done very concisely in any exchange that you would list on. And so, and I think that's the segue into the European markets. There, it's very similar. The review processes, the evaluation, both quantitative and qualitative, are similar to what you'll find in North America. So, but yes, I mean we're starting to see a couple of more issuers knock on our door for other markets, or to at least explore other markets.
Okay.
So, and depending on the sector that you're in, I mean, I think you've seen Seth over the last, well, at least here in Canada, at least over the last 12 to 18 months, a real focus in, medical cannabis, and you've seen some people take an interest in the electrical vehicle market. You've seen others take an interest in artificial intelligence, and cybersecurity still tends to be big. So, and those sectors tend to gravitate towards different markets, or markets that will assist their corporate objectives.
Well, let me ask you this, Todd. You talk about the listing requirements, and what I really try as best as I can when I have an expert in any given industry on the podcast, I want to try to squeeze out as much value as I can. And so, truth be told, I guess any CEO can go online and just type in listing requirements and just get the black and white list for each exchange. Is there anything that you can give us that you feel comfortable giving us between the lines? Any like one or two bullets of, hey, you wouldn't know it from the black and white letter of the law, but here's something really helpful to look out for? Or along the same lines, give me one or two good stories that may have happened within the listing process, unexpected, for good or for bad.
Well, it's funny because if I had to sit down and talk to most CEOs, in real estate there's location. When it comes to uplisting or listing on an exchange, and from the exchange's perspective these days, given shareholder activism, corporate governance. Now, a lot of your listeners are going to roll their eyes and go, "Oh my God, that's a topic like watching paint dry." And unfortunately,
how'd you know I just did that? I just did that, literally.
So unfortunately, they're correct. But what most people don't know, and if one of those points happen to be that the exchanges themselves take corporate governance very seriously. It's a mandatory requirement, and it's essentially 1/3 of the review process. So getting things like your nominations and your audit committee and your processes down with respect to corporate governance early is probably key, and it will save you a huge headache. We ourselves, in much of the comment letters lately, have been, and again, I guess this may go to the story part, we're starting to see anywhere from 7 to 8 type questions, all surrounding corporate governance. And then I think the second point is and again, and underpinned by governance, is selecting your board members carefully. And today, I would suggest if you're in any particular sector, that you at least have one person who's conversant in that sector on your board of directors, so that you have proper company stewardship. Because otherwise, instead of having, let's say, 5 or 6, 15 odd comments on your listing comment letter, you could end up with 35 or 40, and it just takes that much longer. So
I'm gonna make an assumption. I'm gonna make an assumption here, though, in terms of that area of expertise, in terms of expanding your board. I would imagine that for some of the smaller CEOs, although they likely will sit down and say, "Oh, I know plenty of people to ask to be on the board," but I've seen it happen where when they put pen to paper, they really don't know that many people with impressive expertise in a given area that will really help push the agenda of upgrading the company's sort of face as they grow and go up to Nasdaq. And so I would imagine they turn to you and say, "Well, who do you know? Do you have those relationships with independent board members that you can help, whether plug them in, introduce?"
We do, and this comes again with having collaborative having relationships or good working relationships with legal counsel, auditors, and other key members of the uplisting team, if you will. So we do, and over the years, as you might expect, we've identified many good people in that particular area. I think one of the challenges that many C-suites have when selecting and let's call a spade a spade. What you want in your first year when you're on either the Nasdaq or the New York Stock Exchange, you want to have a good working board in order to meet corporate objectives within those first couple of quarters, because you're now on a senior exchange. But I think what most CEOs grapple with is the actual reporting to a board of directors, number one, and then number two is that loss of control, or that loss, like you feel like you're losing control, because there is a group of men and women who are ultimately responsible for the stewardship of the company and for the and who have a responsibility to the shareholders. So you you want people who are knowledgeable. You want people that have the credentials in a particular sector, and you want people who are solution based enough in order to push the corporate objectives. Because ultimately, you want to do what's in the best interest of the shareholders, and you want to do it with focus.
Well, I will tell you this, Todd. I learn something new every time I talk to you, and I guess we'll wrap it up by saying, you had mentioned that real estate, and then the uplisting world, uplisting.com. The key terms are corporate governance. But at the end of the day, I think that as you had said earlier, it's all about relationships. And so I appreciate our relationship, and hopefully we will have had the opportunity to shed some light on this topic to a lot of CEOs. And I just want to thank you very much for taking the time and speaking with me today.
Thank you, Seth. I very much appreciate the opportunity to at least touch on some more general topics, and I look forward to talking to you more in the future about uplisting.